I think I might be colorblind because all I see is red. Everything is down. Everything is red in my watch list and even more in my portfolio. The Toronto Stock Exchange had its worst trading day since September 2015, triple-digit loss. So it's affecting Canadian stocks right now. AT&T dropped a little bit also, dropped 8% actually, but it's a stock that I bought at 32, so compared to my purchase price, it didn't drop that much. Everything's dropping, but at least with AT&T, I'm getting dividends. ExxonMobil also dropped yesterday. Apparently there's a lawsuit against them because apparently they misled investors on the risk of climate change, how it would affect the performance of their company. Apparently you could sue a company for anything. So seriously, this is definitely a buying opportunity, probably not at this price, probably around 75. See, that's the thing though. You don't know if it's a crash, you don't know if it's a slight correction. Most analysts on CNBC say it's a correction, but they could be wrong. But here's what I think. When it's a crash, it usually drops much harder. If you look at the 2008 crash, it was really a sharp decline. This isn't really a sharp decline. It's like a gradual decline. So that makes me believe that it's a correction. I could be wrong, but that's just what I think. And here's what you should do. If the stocks rebound and you're going to feel bad that you missed out on this opportunity, on these low prices, that you didn't buy anything, then maybe you should buy something. But if you're not going to feel bad if stocks go back up and that you missed out, then maybe you should wait and see what happens if stocks will continue to drop, see what's going to happen. I fall in the first category where I'm going to feel bad if stocks go back up and I didn't buy at these prices. So personally, I'm going to try to buy at these prices. Any stock really is going to be good as long as it pays dividends. I'm going to look for stocks that pay dividends because in case it continues to drop some more, at least I'll be collecting dividends while I'm waiting for the price of the stock to go back up. And if it goes back up, perfect, I can sell. If it continues to drop, if I have enough cash, if I have enough liquidity, then I'm going to buy some more. So that's what I'm going to look for right now. Just good name companies that are not going to disappear and that pay dividends and that have dropped considerably so that I can guarantee some capital gain and high dividend rate. So ExxonMobil would be good at 75. Now, Kanoe Income Fund, this is a mutual fund or an ETF on the Toronto Stock Exchange. It's a Canadian stock. This one's perfect, pays 10 cents per share per month. So it's about 11% per year. And right now it's trading at an attractive price, 11.29. It's at a 52-week low of 11.26. So it's definitely worth watching if you like dividends because it pays around 10 to 11% dividends per year. If it drops some more, the dividend rate might be higher because it always pays 10 cents per share. So if the stock price is lower, then the yield will be higher. And it's very consistent with the dividend payout. So this is a good stock to watch if you like dividends, and also it invests in big name companies. So it's an ETF or a mutual fund that invests in big name companies, and it is able to distribute 10 cents per share by selling covered calls. So it's similar to the Quadravest mutual funds, but it fluctuates less. Personally, yesterday I bought some Dividend 15 Split Corp 2 at $4. It's not paying dividends right now, but when it does, it's going to pay 10 cents per share and it's going to be at a ridiculous yield. So when it starts paying dividends, it's going to be at a 30% yield. So that's why I bought this stock. It's been paying the dividends pretty consistently, except maybe like a few months. This year it hasn't paid it for about like 4 months, I believe. But it's been pretty consistent since 2006, I believe. And even if I don't get dividends, it fluctuates a lot. So if it goes back up to 5 or 6, I'll just sell and make a capital gain. I had also bought some Dividend 15 Split Corp, the FN, at 8 last week, and it reached 9.44, I believe, at the beginning of this week. And I was thinking of selling it, but I wanted to sell it at $10, and now look, it's dropping close to the price that I bought it at. So I definitely feel bad about that. But this one pays dividends regardless, 10 cents per share, and it's never missed a dividend distribution. So this one I'm more confident in terms of dividends, but disappointed that I didn't sell and make 16% capital gain in like 3 days. Facebook is looking really good at 146. I love it when stocks drop because of a general market. They don't drop because of something that the company did itself. So when stocks drop because of the general market, it just makes it a buying opportunity for these individual stocks. Because obviously nothing bad came out on Facebook yesterday, yet it dropped pretty hard, trading at 146. Now, here's a stock I really want to buy, Intel at 42. I wanted to buy this stock if we look at 6 months. So I wanted to buy the stock over here when it was trading at 43. I was waiting for it to drop to 40, I believe, and of course it didn't drop to 40, and then it just shot up to 57. So I missed out on it because I was a little bit picky on the price. I wanted to buy it at 40, and instead it just shot up while it was trading around 43 back in January. So now it's come back down to January numbers, January prices, and even lower. Yesterday it closed at 42.42. So this stock has good potential capital gain. When your target is 54, and you could see that it was trading at 57 not long ago. It pays 2.83% dividends, so it pays a little bit of dividends, not that much. But what's great about Intel, it's a great chip maker, not going anywhere, great competitor to AMD, and right now it's trading at a very attractive price. So I'm gonna try to get into this stock. We'll see what happens. Now AMD, now that's a story. Now this stock, I was watching it when it was trading at $9, $10, and $11. I didn't buy, and then what happened is that it shot up to 32. So as you can see here, it went from $9 to 32 in less than a year. See, April 2018 to September. So in 5 months, it went from $9 to $32. Crazy growth. And now today, well, yesterday it dropped to 18, and it looks like pre-market today is also 18. So it dropped pretty hard from 32. I was even thinking of buying put options when it was at 32, but it's a little risky, and I didn't. But I did think about it, and definitely would have at least doubled my money if I had bought some put options at 32. And the only reason I thought about it is because there was a subscriber that commented on the stock saying that he personally bought it at 12 and has been continuously buying the stock as it goes up. And but I felt like it was going to go the opposite direction. It went up too quickly. It's not going to continue to go up this way. And now look at it dropping to 18. So I'm sure there is regret not selling at 32, not taking your gains. Like imagine you put in $10,000 at $10, right? And at 32 it's worth 32,000, and now it's at 18, so you just lost $12,000 like that. $12,000 of profit you could have confirmed by selling at 32. So I don't know, personally I wouldn't be able to just watch the profits disappear. I'd want to sell and confirm. But now it's looking attractive again. It doesn't pay any dividends, but in terms of capital growth, it's there, it's available, capital gain growth. So definitely worth watching. I'm not sure which price I would buy it, but definitely around the $12 range, it's gonna look good. So this one doesn't pay dividends, so you really have to know. It's gonna be capital gain opportunity for this one, but definitely worth watching. This one and Intel. Intel is getting close to the price I want to buy it at. AMD, I'm not sure yet, but just definitely worth watching. So what's the next crash going to come from? People are saying that it could come from student debt, which is very, very high. And it could also come from the interest rates that keep rising. If interest rates keep rising, people won't be able to afford the loans that they already took, like mortgages or car loans. So there's going to be more defaults. And so either student debt or interest rates that keep increasing could cause the next market crash. If we look at 5 years, the Dow Jones, you could see the highest was 26,000. Now we're at 24,000. I mean, it's dropping, but doesn't look like it's dropping hard. If you look at the max here since 1985, it's not crashing hard, as opposed to if you look at 2008 here, you can see how it dropped like an arrow. But right now it's not dropping like an arrow. So here, this is what it looks like here for 2017, 2018. And if we go back to 2008 and 2009, so look at the way it dropped. So it dropped pretty sharply from 13,000 to 7,000. So we know that the lowest it'll reach is 7,000. That'll be, I don't think it's going to be as bad as the 2008 crash, if there is a crash. Right now we're at 20, we were at 26. Now we're at 24. I mean, look at this section here. Look how sharp it is. This one here also, look how sharp it dropped. Not sure if the same thing is happening. Volume is pretty high though. If you look at the volume here below, the bars here show the volume. Volume is pretty high. It's actually higher than 2009. The activity is much more. So really, who knows what's going to happen? Lots of signs show crash, lots of signs show correction. You just have to prepare for both. And to prepare for both, in my opinion, is to buy a bit now and also make sure you have enough to buy a bit later. But make sure you buy things that pay dividends while you're waiting for the stocks to go back up, while you're waiting for the market to rebound. Pick individual stocks that have good capital gain potential and pay dividends, pay decent dividends. All right, that's all I have for today. See what happens today, which stocks look good, which stocks are worth buying. So many opportunities, really. If you're going to open an account with Questrade to trade on the stock market, use my referral code in the description below the videos. You can get between $25 and $250 back. If you have any questions, leave them in the comments below. Don't forget to share this video with your friends and subscribe to the channel. Thanks for watching.